It was only a few years ago as well that there was a tax-free dividend allowance, and obviously that's now peanuts now. But back in the day, that I think at one point it was like 5,000. I think 1 year it was 10,000 tax-free dividend allowance that you could get, because they identify that it's a significant risk putting your money into a business. But yeah, you are right, Simon. The calculation as to whether you as a business owner should take dividends or salary out of your business, and how exactly that mechanism works and what amounts you should be paid on salary versus dividend, is really going to be unique for pretty much every business owner. It is not a straightforward calculation, so we wouldn't suggest that you're doing it yourself. I do think you need to have a call with your accountant to do it, because it needs to take into account how many shareholders there are in the business. So if you've got like if you've got your wife or your husband is a shareholder in your business, that significantly changes the calculation. You need to take into account how much of the employment allowance you're currently using, what your total company profits are, and therefore the rate of corporation tax that you pay, what other income you've got as well. So all of those things need to go into the equation. But an accountant should be able to say to you whether you'd be better off still taking dividends or whether you should switch to a salary instead.
Absolutely.